So thank you, everyone, and welcome to the fun panel. We're here to talk about emerging technologies like blockchain, AI, 5G. These are big buzzwords I think we're all hearing lately. I was just actually struck. I was in Geneva last week, or 2 weeks ago, for the WTO forum, and a lot of the panels were focused on these emerging technologies and what do they mean for trade. And so I'm excited to hear from our fellow panelists of how not only are these buzzwords, but how are we applying them to real-world applications and solutions. So I think I'll start with Doug Bell from. I'm not going to introduce our panelists. I think you'll find that their bios are in the program, and I think in the interest of time, we'll just get right into it. So Doug Bell from Treasury.
All right. Well, thank you. So I'm actually going to talk a little bit about the rules and regulations that establish sort of the roadmap about how we might be using some of these technologies and some of the challenges that the technologies present as well. But first of all, let me just start off by saying thanks to CSI for providing this opportunity. I'm going to talk specifically in the financial services space, which is sort of the Treasury wheelhouse. And I think, while it is a heavily regulated industry, I think it does provide some insights, not only in terms of other regulated sectors, but more generally in terms of the principles that might be evolving over time. So in the financial services space, Treasury is carefully balancing the relationship between trade rules and government regulation. And in recent financial services negotiations and efforts, Treasury has been intent on developing policies and the discussions around some of the emerging technology issues, specifically electronic payment systems and also data localization. Now, I should add that while those are the particular focus of the moment, I think we fully recognize that there's a broader set of issues, and I'm sure today's discussion will highlight that our focus may need to evolve over time. And one of the things that's sort of critical in terms of our understanding that is the engagement that we have with you as stakeholders and understanding what are the priorities and where are the things that are kind of the core fundamental principles in terms of regulation and trade rules that we need to get right in order to ensure we have an open and competitive playing field for U.S. industry around the globe. And our goal is to, as we do that, it's to also ensure that we're sensitive to our own prudential and regulatory objectives. So those include financial stability, cybersecurity, privacy, financial inclusion, anti-money laundering, and of course, anti-terrorist financing. So the example that I'd like to discuss, a real-life example where we've balanced those trade and regulatory objectives, is in the development and financial services side of a data localization provision in our trade agreements that began in 2015, and then just most recently was successfully codified and achieved in the USMCA that was just announced in the last couple weeks. When we were developing that policy, there were concerns from the regulator perspective that foreign jurisdictions could limit their access to data, and that would, and in that regard, prevent their ability to perform their regulatory prudential responsibilities. And that was concurrent in terms of that moment of time with industry concerns that the trade agreements were being constructed where data localization prohibitions were going to be captured for other sectors and not in the financial sector. And so I think that created a certain tension that we needed to resolve. Since I only have 5 minutes, I won't get into the nitty-gritty of that, how we did that. It was quite complicated, though, and it required both a serious high-level commitment, political-level commitment and engagement between Treasury and the heads of our regulatory agencies, as well as in-depth engagement with the stakeholders and getting into the nitty-gritty of IT function and how databases are formed and all these type of things. But at the end of the day, we were able to balance the need to eliminate protectionist measures and specifically those around governments that require local storage and processing in the financial services sector, and ensuring that our financial regulators have access to the information that they need. Going forward, we're looking at this in kind of two fashions. One is from the domestic side. As I've noted, the importance of ensuring that whatever we do in terms of projecting U.S. policy objectives abroad has to be consistent with our domestic environment. And so I'm sure many of you, if you haven't read it, are certainly aware of the fourth and last Treasury report that came out of the EO exercise to improve our financial regulatory environment. This was the non-bank finance, fintech, and innovation, and that built on kind of the processes that we used on the prior reports. But basically what it did is it looked at and came up with a series of recommendations on consumer data aggregation, lending, payments, credit servicing, financial technology, and innovation. On the international side, as I mentioned, we have this foundation based on working with our own regulatory community in terms of promoting it. We have a number of tools that we're using on that. From in the Treasury world, we have all of the G7, G20, bank fund meetings where we use those as opportunities to bilaterally and in a multilateral environment to pursue these type of policies and address in a timely fashion. I already talked about what we've done on the trade agreement side, so that's in a more formal structure. And then we also engage on a regional basis. So, for example, with ASEAN, where regulators are developing a commercial payment system, we've been working with them to ensure kind of these open competitive environments. So that is sort of, and then multilaterally, of course, the U.S. government is engaged in the WTO and the data, the technology, digital exercise that you just mentioned. So overall, to conclude, I think there's a couple, what I really want to leave you with is a couple thoughts. One, we're in the process of developing a model that looks at, what are those core attributes that we need to be focused on? How do we integrate trade rules with the regulatory structure, which is so important in the financial services space? And then, how do we pursue that, whether it's through trade agreements? And given kind of the limited number of trade agreements that it's possibly negotiating, what are the other venues and forums, and how can we creatively pursue these objectives in a way that, again, gets us back to that open, competitive environment that we're seeking? And I'll stop there.
Thank you, Doug. Next, we'll turn to Annette Mueller from Maersk to hear about blockchain and the supply chain industry.
Great. Thank you, and appreciate being here. So I have a video that I would like to share with you that shows what our solution will accomplish, and then I'll recap after that.
Global trade functions much as it has since the introduction of the shipping container in 1956. Manual, paper-based processes are still common, and information about the status of goods is locked away in organizational silos. Today, 90% of goods in global trade are carried by the shipping industry, with the supply chain slowed by the complexity and sheer volume of point-to-point communication across a loosely coupled web of land transportation providers, freight forwarders, customs brokers, governments, ports, and ocean carriers. IBM and Maersk are addressing this problem with a distributed, permission platform accessible by the supply chain ecosystem designed to exchange event data and handle document workflows. Maersk and IBM are employing blockchain technology to create a global, tamper-proof system for digitizing trade workflow and tracking shipments end-to-end, eliminating frictions, including costly point-to-point communications. The collaboration will launch with the potential ability to track millions of container journeys per year and integrate with customs authorities on selected trade lanes. In a recent test by Maersk, shipping a single container of flowers from Kenya to the port of Rotterdam resulted in a stack of nearly 200 communications. Using this example, we will examine how blockchain has been implemented to create trust and security in the digitized document workflow and improve the efficiency of global supply chains. Here we can see each distinct entity involved in the transaction: the growers, export authorities, ports, customs, and importers. Shipping from the port of Mombasa requires signatures from 3 different agencies approving the export and 6 documents that describe the origin, chemical treatment, quality of the produce, and customs duties. Firstly, using a PC or mobile device, the Kenyan farm submits a packing list that becomes visible to all participants. This action initiates a smart contract that enforces an export approval workflow between the 3 agencies. As each agency signs, the status is updated for all to see. Simultaneously, information about the inspection of the flowers, the sealing of the refrigerated container, the pickup by the trucker, and the approval from customs is communicated to the port of Mombasa, allowing them to prepare for the container. All actions relating to the documents and the physical goods are captured and shared: which documents were submitted, when and by whom, where the flowers are and who is in possession of them, and the next steps in their journey. Flowers are perishable, so it's crucial that there are no delays or missteps. Blockchain provides secure data exchange and a tamper-proof repository for these documents and shipping events. This system could significantly reduce delays and fraud, saving billions of dollars annually. And according to the WTO, reducing barriers within the international supply chain could increase worldwide GDP by almost 5% and total trade volume by 15%.
Good, so that is how our solution was planned and is being developed. And Maersk and IBM, under a collaboration agreement, have both being leaders in their respective industries, said, hey, how do we push trade forward in the shipping world, and how can we help to increase efficiencies and reduce trade barriers? So by creating a platform that includes all the ecosystem participants, being the transportation providers and customs authorities around the globe, that would connect or integrate into the platform, would then create a network that gives the platform, which is TradeLens, that has 2 applications, which is visibility and then documentation. So with the blockchain technology, we would decrease the paper that is often in, for those of you in the transportation world, know there's a lot of siloed information and a lot of manual processes, even in the developed worlds. So we feel by connecting the ecosystem will allow for developed and undeveloped countries to participate more in trade. So while trade policies are going on and the current events that you hear today, we are working on a solution with emerging technology to move the movement of the goods for cargo owners to have a better way to do business and more business, especially in countries that they're not trading with today.
Thank you, Annette. Next, we'll turn to David Weller from Google to tell us about how Google is implementing AI and machine learning into e-commerce platforms.
That in 5 minutes. I might take 8 minutes. Well, thanks so much, Sahra and Christy and CSI. And you know, as you said at the beginning, there's kind of a mind-numbing stream of terms that you hear when you either step your foot into the technology space or just turn on NPR in the morning and hear their little kind of sponsorships and, you know, 5G, IoT, AI, ML. When my son's in the room, C3PO, but I think he's talking about something else. You hear all these acronyms, and I think Deborah did a really nice job at the beginning of kind of translating one of those technologies. But I think what's really important when we think about this in a trade context is this. While we're talking about kind of the new bright, shiny technology objects today in this panel, the story is really what it's doing for trade. And the ultimate thing that it's enabling, activity that it is enabling, is the core key trade activity that in the panel discussed earlier this morning is really what gets a lot of us out of bed each morning. The vision that when you break down barriers, technology barriers, government barriers, between countries, between people, great things can happen. connecting entrepreneurs and businesses and farmers and fishermen with consumers, and promoting that kind of integration. And technology is one tool to really help break that down. So I'm going to talk a little bit about one of those acronyms, or two of those acronyms, AI and ML, artificial intelligence and machine learning, and what that's meaning for trade, but also how in a way that's not actually changing trade so much. And I'll tell a couple of stories, but before that, let me just do a very quick primer on AI. And maybe the way to think about it is what sort of traditional computer programming is about. And hopefully some of you have programming skills that go beyond my days of programming in BASIC, like God knows how many years ago. But even, if you take it back to that kind of very basic programming to even more sophisticated programming that still goes on, a lot of it is writing essentially sort of statements of conditionalities and sort of if-then statements. And these can become incredibly complex with lots of different interdependencies, but it's essentially writing rules in advance to dictate what an output will be. And this is an stylized example, obviously, of what a traditional spam filter looked like in your email. If your email contains X, Y, and Z, but not Q, R, Z, then put this in the spam folder. And that way of combating spam, and some of you may remember when you kind of first got email systems, was not all that effective. You got lots of things that were spam that still came into your regular inbox, and there was also kind of an over-inclusiveness, lots of things that were relevant to you that went into your spam box. And part of the reason for this is that the techniques of spammers is going to change constantly. And secondly, sort of the context, depending on what kinds of emails you are getting and where you are and so forth, are going to really change what's, what might be spam or what might not be spam for you. AI and machine learning do something a little bit different. I mean, AI is basically, computer science that is learning itself, has some kind of intelligence built in. And machine learning is kind of a subfield of that, that really is about computer science that is learning based on models. And you're training models based on large sets of data so that the model, a bit like a human, is kind of learning from experience. And this is, it's always good to have a cute dog or cat video just to spice up the presentation, but it is relevant too. This goes to kind of vision recognition technology, right? And how would you write a rule that would let a computer know that this is a dog and not a cat? Super complicated, problem, challenging computer science problem. And essentially, in a machine learning environment, what you've done is trained an algorithm with thousands, hundreds of thousands perhaps, pictures that have been labeled as cat and dog, with verification on the back end, and over time that system learns. And ultimately, you end up with kind of a much smarter system than you do in sort of the traditional rules-based kind of computer science. So I want to talk a little bit about sort of very briefly how AI and ML is, or you're probably already experiencing it today, even if you don't use those acronyms or think about it, and then I'm going to tell a couple of quick trade stories. So in kind of the consumer space, so this is Gmail and a new feature that we rolled out recently called Smart Compose, and we also have something called Smart Reply, which essentially kind of based on the very little context that you have given will start to kind of complete your sentence for you. And it's fairly new, but I've found it's actually works pretty well. Saves you a lot of time on some of the niceties that you do in emails or kind of basic logistical things that you have to get through. in email, and it's learning from context. Another example is in Google Photos. I don't know how many of you use Google Photos, but now you can search in Google Photos for baseball game or birthday parties, and all of your photos in your own library that pertain to that will come up without you ever having labeled those in advance. And that's all because of machine learning. It's something that we couldn't have done 8 years ago, probably even 5 years ago. So I want to talk two quick examples. The first has to do, and now back in trade, with what is really kind of the most persistent barriers in trade, which is language. And Matthew Reisman and Brian Bieron and others were talking at the panel this morning about how e-commerce and the internet is overcoming the challenge of distance and the curse sometimes of location, as Brian put it. But you still have the language gap. And if you have that small seller on eBay who is now discovering new clients, new customers in another country, your results need to be visible. You might need to be able to communicate with that consumer if they have questions and interactions. And language differences are a real barrier to that, obviously. And this is sort of an example, bringing it back to AI and ML, how Google Translate launched about 12 years ago. I don't know if any of you kind of remember what it looked like then, but it was pretty janky. And that the first result was the kind of things that you would get sometimes, and it was kind of funny and hilarious, but not really all that useful. And this is obviously a super simple example, but you're getting much, much better quality translations now, often translations that you can't tell whether it's been done by a human translator or by machine. And that has tremendous power in a trade context. And so many platforms, sometimes through APIs with Google, sometimes through their own systems, have developed their own machine translation kind of capabilities that they integrate in their products. This is from eBay, which has been doing it for a while. And they made a change in the middle of 2014 to move to kind of a better translation system. And the reason I'm mentioning the eBay example is some economists from MIT just released some really interesting research last week that really kind of confirms what we would understand intuitively, that this has a huge trade impact and makes it much easier for an eBay seller or someone else online to actually export. And what they did, and this kind of shows the difference before and after their upgrade in machine translation quality occurred, they found an 18% increase in sales of eBay small businesses from prior to the improvement in machine translation. So an 18% increase in exports. That's a really big, significant number, comparable to the number also found in eBay for when export administrative costs and logistics costs were eliminated. Similar kind of uptake. So we don't normally talk about in trade language as a trade barrier, but it is a huge trade barrier, and machine translation is helping us address it. The second example I want to just quickly talk about is more from, in a sense, the government angle. And an important part of trade, of course, also is ensuring compliance with trade rules, and that we're playing on a common rule book, popular topic in trade today. And AI and machine learning can have a really important role in that too. And this is the problem I'm going to talk about is fishing. Problem of overfishing, which is a huge problem in international trade. 90% of the major fish stocks in the world are either overfished or have been fished to capacity. That's a really frightening number when you think about 3+ billion people in the world have fish as their primary source of protein. So this is a big problem. This is a picture, by the way, of fishing vessels going out to the East China Sea after they have like a 3-month ban on fishing to try to address this. And this is right after that 3-month ban is listed. And basically what we did, we partnered with a couple of NGOs on a project that's called Global Fishing Watch. And essentially what it does, and it's actually a bit similar to what you were talking about in the Maersk context before, but it's using data which any commercial vessel generates and is publicly available to map out fishing patterns globally on a ship-by-ship basis and in an aggregate basis. And it's a way for countries who have, by the way, entered into various different international agreements on fishing and have their own national rules, but there's a huge problem of compliance and transparency. It allows governments to actually see what's happening, see where the overfishing is happening, and be able to enforce their rules in a better way. So I will finish there. I know we're short on time, but I guess my main takeaway is that the technologies are important, but the technologies are a tool. Ultimately, what this is about is making trade work better, and I think all of the examples we're talking about really kind of fit into that. So thanks.
Thanks, David. Next, we'll turn to Tom Dailey from Verizon to talk about Verizon's deployment of 5G, a very important technology that just begun October 1st.
Thank you very much, Sarah, and thank you, CSI. And David's remarks I thought are fascinating because, as we move into the 5G discussion, we think of 5G at Verizon as an enabling technology. It enables everything from the voice communications to data movement, and then, of course, ultimately to trade. And the U.S.-Mexico-Canada trade agreement is one of the important elements from our perspective is the fact that it includes some very helpful language on data and avoiding rules that would limit the movement of data. So I'm going to talk a little bit about what 5G is, maybe demystify it a little bit, hopefully not confuse anyone any further about what the technology is about, and then talk a little bit about the connection into the trade agreement. So 5G is really a fundamental sea change in technology when it comes to wireless. Over the past couple decades, we've had transition from regular voice from 2G to 3G to 4G, and all of those were essentially evolutions along the same plane. Data movement started getting a little faster. We had digital technology enter in, more security, and so forth. But 5G is a very, very different animal. So let me talk a little bit about some of the technologies that it will enable. Artificial intelligence, that we just heard a bit about, augmented and virtual reality, industrial robotics, and telemedicine. These are all areas that are going to be enabled because 5G has four very important characteristics. One is that it's super low latency. That basically means that the time it takes for a signal to go back and forth between a device and the internet and back is really fast, in the blink of an eye. In fact, multiple times in the blink of an eye. An example, we talk about milliseconds in terms of how fast data goes back and forth. If you think about an automobile with autonomous driving, a car with 35 milliseconds of latency could receive a signal to stop in about 40 or 50 feet. If you have a kid rolling a ball out in front of a car, 40 or 50 feet isn't going to cut it for you. With 5 milliseconds, which is what 5G promises, and even faster than that, the stopping distance is about a foot or two. So that latency is a new component. That super low latency is what's going to enable a lot of really cool technology to happen. We don't even know what it's going to look like, to be honest. We're all starting to understand what it can do. But when you couple that with super fast speeds in the gigabit speed range, that is just an amazing combination of low latency and super fast. And then the volume of material that you can move back and forth is the third component. And then finally, battery life. Oddly enough, all of this can be done with batteries that will have a much more extended life so that you can actually use the devices for much longer between battery changes. So when we think about 5G at Verizon, we use something called ultra-wideband technology. And what that means is it's a combination of components. So let me just kind of break it down a little bit for you. The first component is something we call the intelligent network. So the intelligent network uses software, virtualized and software-defined networks that use the software to create an environment in which data can be moved, secured, and stored almost seamlessly over the internet or even over private IP networks. The next component of 5G is something we call the multi-access edge computing network. That's a fancy way of saying what we are doing is pushing technology out to the edge of the network, much closer to the end user. So if you think of it as a whole bunch of little mini cloud data centers that are pushed out to the edge of Verizon's network, so that if you're using a device that needs that super low latency, the distance that it has to travel is much shorter. So that's part of the key component to our network, and something that actually distinguishes what we're doing from some of the other 5G networks that you'll be hearing about from other companies. Deep fiber is the next element. So we have been buying companies, Exo Communications, which some of you may know about. We bought Exo because Exo had a lot of fiber in the ground. 5G, even though we talk about it as a wireless technology, is essentially built on fiber. All wireless communications technologies are ultimately based on fiber. But 5G, because of the amount of data that is going to be moving, it's essential that any company deploying it has a lot of fiber way out into the network. So that's something that we've been working on at Verizon, thinking ahead to get the fiber that we need. We've also done a deal with Corning to try and secure the actual fiber itself, because fiber is ultimately a scarce resource in a way. And then the final aspect of it is spectrum. There's auctions going on about the spectrum, but we actually bought a company that had a lot of spectrum not long ago by the name of Straight Path. It had the type of spectrum which we call millimeter wave spectrum, which is exactly the kind of stuff that we feel we need to enable this ultra-wideband network that we're talking about. So just to put some numbers to all of this, the 5G network that Verizon's designing and deploying, in fact, it's already been deployed in 4 cities around the country. It's going to have capacity that is 100 times that of today's 4G LTE network. The network latency is so low, as I mentioned, data moves faster than the blink of an eye. Data speeds that are 20 times faster than 4G, and then again, with devices that will consume much less energy. So what does 5G have to do with the recent trade agreement? So let's start with the premise that data is the lifeblood of the digital economy. And a lot of the technology that Dave was describing requires an awful lot of data to be moving around, as well as the example that was given around the shipping industry. So today's digital economy is global in nature, and modern trade agreements can provide service companies like ours, like many of you in the room, with a high level of certainty that they will have the non-discriminatory market access, and importantly, the ability to move data across borders with minimal or no impediments. That's key from our perspective. So given that cross-border trade is in its essence an exchange of data, unnecessary restrictions on data flows have the effect of creating barriers to the growth of digital services. So the recent trade agreement with Mexico and Canada establishes a digital trade framework that will support the rapid growth of the services trade by securing strong market access commitments on investment and cross-border digital trade. It also facilitates cross-border data flows and prevents localization, which we heard a little bit about earlier. Those localization barriers also interfere with the ability of data to move back and forth. So a good illustration of this, to kind of wrap up, is in the healthcare field. So if you take healthcare as an example, 5G provides the opportunity to lower healthcare costs and to improve patient outcomes through the use of high-speed and low-latency networks like the one we're designing. But the end-to-end network is only as fast as its slowest link. So 5G takes the last mile, or the last 100 meters, as the case may be, and it turbocharges it. So it allows more effective cross-border healthcare services delivery and collaboration. For example, among healthcare specialists located in one city in Canada might collaborate with a healthcare specialist down in Texas or in Mexico to deliver services. And because there's that low latency network, you can actually see the patient. You can have a virtualized operating room or a virtualized examination room and be able to deliver those healthcare services in a much more efficient and cost-effective way. So what does 5G mean for consumers, enterprise, governments? So consumers, the best example is what we're doing now in the 4 cities. We have a wireless broadband connection that goes directly to your house. For those of you who have FiOS as a service delivery or ISP here in the East Coast, 5G will allow us to essentially eliminate the wire that goes to your house. We can deliver that broadband super fast to your home. We're rolling this out in cities that we don't have FiOS, as you might imagine. For your cell phone, it means 10 times faster battery life, 20 times faster data speeds, all the things I was just talking about earlier. For enterprises, and we consider 5G to really be an enterprise-oriented technology. It's going to support business innovation and create new markets. We don't even know what they're going to be. We're looking forward to seeing people design technology into the network that we can use and others can use. And then ultimately for governments, this is where I think we're going to see some real benefits, because 5G is quite a natural thing for cities and urban areas. We're going to see the first 5G cities as technology hotspots, places that will attract business, create jobs, and expand the tax base. A good case in point is that we are partnering with the city of Sacramento over in California to implement a range of smart cities applications, including traffic flow management and so forth. So I'm going to wrap up with one I guess, plug for the FCC. The FCC, under Chairman Pai's guidance, has done a huge service to the American economy by facilitating in essence, the rollout of 5G for all the companies that are doing it, not just ours. And what they've done is essentially facilitated the rollout by helping to eliminate barriers at the state and local level and reduce the time that it takes in order to do these deployments. Because fundamentally, we're talking about blocking and tackling, getting fiber in the ground, getting antennas hung off buildings and light poles and so forth. So I just wanted to put in that plug for the FCC, because it's a terrific job they're doing. And 5G really will help enable many of the businesses in this room to do many of the things that they're looking to do.
Thank you, Tom. I think we'll turn to some questions, and I'd love to hear from Doug and get your perspective now that you've heard the companies talk about 5G and blockchain and AI. Curious to hear if you think today's governments, our institutions are equipped to construct the right trade rules for these emerging technologies.
Well, without the kind of the normative part of that, or subjective whether they're equipped, I think there's probably no question that they're going to. And so I think really then it's, what are the type of, rules that we want to see? And I think from the U.S. government's point of view, we want to see, I think it would offer that, avoiding rules and standards that are overly prescriptive and will effectively, in a trade context, discriminate and in many instances, serve the interests of domestic suppliers over international and many times U.S. companies. I think the other aspect of this, of course, is that it'll be important to monitor countries and institutions as they develop these new set of rules. I think that's something that we have a responsibility as the U.S. government. But I think in kind of use the canary in the mine metaphor, I think the private sector is going to have to play an important role in that as well, to kind of ensure that we kind of understand what's going on and where there are these kind of emerging technologies and these rules that have the potential to discriminate. We need to be made aware of them.
If I could indulge you for another question. So the U.S. has a few trade agreements, but without formal trade relationships with many other foreign nations, how do you see Treasury engaging on financial services?
Well, I think I sort of suggested in my talk a little bit about some of the forums that we pursue. I think the one angle I would add to that I think is important, that certainly reflects my institution's capabilities, is that within Treasury, Treasury is a financial regulator. We have a very robust banking office that works with all of our regulators. We have the trade side that I oversee. And then we also have our regional offices, which are responsible for the relationships. And I think as that kind of evolving model that was trying to describe to you, I think one of the things we see is that there's going to be a need to kind of engage with central banks, finance ministries, in a way that maybe perhaps a little bit more on a cooperative, that won't be based on as our suggestion on a trade agreement, or various tools that we can bring. And I think it's incredibly, I feel it really enhances our ability to do that when we can bring from the single organization those different perspectives, so the relationships, the regulatory side, and then the trade side, and then think about how we can kind of creatively engage and kind of scale that up, I think will be really important. And then, of course, the trade agreements and hopefully in the WTO, those things will, I think, catch up. But in the meantime, there's going to be a lot of activity in this space going on, and I think we need to really work hard to kind of stay, if not ahead of the curve, at least comparable to the pace of change that's occurring.
So I think something everyone mentioned was data and the importance of data and these emerging technologies. So I'm going to throw out a question to the panelists of how important are cross-border data flows and data localization to these emerging technologies?
I'll start. I would say they're extremely important because when you're looking at use cases, when you're looking at pain points and trying to come up with a solution, you want to come up with a whole region solution or a whole country solution. So having data that flows cross-border because you have customers that flow cross-border is key. And in order to actually analyze the data, you're not analyzing one country because you're not getting the whole picture. So you need to analyze it on a cross-border basis as well.
And I would just say from the solution of TradeLens is that it's very important because in engaging customs authorities, if we create more trust and transparency of data, that then allows them to focus on the targeting and the risk of the containers that really need to be inspected, and those shippers, the more known information about shippers. So it's very important of the transparency that we would provide in the solution using the blockchain technology.
Anything to add? Because I have a follow-up question.
Yeah. Oh.
No, please.
Yeah, I guess I would say specifically in the artificial intelligence machine learning context, a really key element that enables it is computing power. And part of the reason that you're seeing such developments in machine learning now is not just that kind of the field of computer science has advanced, but it's also because of the incredible computing power that we can bring to the problem of training models. And, let's say a smaller country says, all data needs to be only stored in that country, depending on what that restriction looks like, you're not going to have the computing power in one country. And to use Deborah's terminology before of sort of a distributed infrastructure, I mean, that's ultimately how certainly our cloud is set up. And I think most of kind of the leading kind of computing infrastructure platforms are set up for, not everything to be done on kind of, in one box, in one place. So I think that becomes much, much more difficult in a world of kind of data balkanization in terms of location.
Yeah, I was just going to add, part of Verizon's international business is in the telematics space. So we provide a lot of fleet management, cars and trucks, and cars and trucks don't stay in one country, and so they drive around. And if you have requirements for data localization, as David was mentioning, it can limit and restrict our ability to offer those services, and more importantly, the ability of the companies that we are trying to serve to take advantage of the data. And to dovetail with the last panel, China is a great example. I mean, China has its new cybersecurity laws that require data that, is generated in China, stays in China. And, we have a telematics business in China. So if you're trying to do tech support, customer care, and the data relates to Chinese customers, you now have to set up essentially a parallel universe in which to do that. So it increases your costs, and it can, it effectively makes your business much more of a challenge to operate within the country.
So recognizing that data is a really important rule in the trade context, I think everyone recognizes that here. But are there new rules that we need, perhaps, on these emerging technologies? I'm curious to hear the panelists' thoughts on that.
So I'll start again. Then
Please.
you can chime in from the
okay.
Treasury perspective. So I would say it's going to require a lot of cooperation between industry and regulators, a lot of education of what the technologies are, what the companies are doing, because you don't want regulation for the sake of regulation, because we've seen that. We've seen regulators rush to regulate, for example, in the US, some blockchain technology, which sort of defeats the purpose of what the technology is meant to do. So you don't want to be so constrained that you can't move with the new technology. So to me, it's an education, and it's really industry and regulators working together to come up with regulations and laws, or just even principles-based, that works for industry, that works for the government, that protects whoever the regulator is looking to protect, whether it's the data, whether it's the consumers. But it's a matter of, just like it's being smart about technology, it's a matter of being smart about regulation, so you don't overregulate and stifle, and you do it coming to it with a knowledge perspective.
Yeah, I think Deborah makes a really good point about the role of education. I mean, I think there will be rules, as I mentioned earlier, so the vacuum will be filled. The question is, are we going to have the right kind of rules? And, I've spoken sort of about a narrow, just kind of the financial services space. I mean, obviously, we have a whole digital services chapter in our FTAs, that USTR has negotiated, which I think does a lot of these things. So there's various ways that we can kind of try and get to those rules. I think, to just echo what I said earlier, though, the question is how do we kind of turbocharge that effort, beyond just, some of the trade agreement space, so that we sort of have an opportunity to kind of influence these things, because I think we're sort of at a pivotal time now where these are really starting to be developed. It's a high interest level. I mean, we could be doing this type of discussion in any country, and I think there would be a great deal of interest.
Sorry, I'll just add a couple of things. One has to do with kind of finding more detailed ways to use trade agreements to kind of address the needs of regulators and kind of trying to address what the real problem is. And I think financial services have been a great example of that, because of the kind of kerfuffle in TPP. There had to be a little more imaginative thinking rather than just writing a rule of, don't limit transfers of data, but, if you have to, it's got to be necessary, proportionate, et cetera, and kind of iterating out, well, what do those conditions look like? And I think there's room to do that more. And I think the standard space is something that could really provide a pathway to solve some of this, because in areas of cyber security and privacy and various different elements of cybersecurity, there are international standards now as to what is the kind of the most protective way to treat data, ISO standards and other bodies. And just as we have in the world of trade in goods used kind of those international standards as a guidepost to, sort of as a proxy, or not a proxy, but a standard that governments should try to hew to, and if a government wants to go in their own direction, then they have to justify it. I think that could offer a path forward on data flows as well. Just one other quick point. There is, and this is specific kind of on the artificial intelligence side, which is there is a huge amount of trade-related government data that governments have that either they don't make public, not for some security reason, but just, they're not in the habit of doing that, or they do, and they do it in all sorts of different formats, not in a machine-readable standard format. And that kind of data, making that kind of data available, will be is what's going to enable technologies like the kinds we've talked about on this panel to be used to make trade more efficient and better. And actually, this wasn't talked about very much, but in the USMCA, there was a provision about this. I think it may be the first time there was a provision like this in a trade agreement that talks about governments making trade-related data in machine-readable format, I forget the exact language, available. And I think that's that's sort of a newer kind of issue to tackle in trade agreements, but whether it be trade agreements, trade dialogues, that's something that governments can do that would really help use this technology to make trade kind of better and more efficient.
Tom or Annette?
I would say from our perspective, what we are also listening to what customs authorities in the developed countries are saying what the standards should be, and making sure that we abide by those, and that we can have an interoperability with other blockchain solutions from other technology companies, that they talk to one another. So we definitely are very much aware and considerate that we have to follow those rules.
Yeah, I would just echo the point about not over-regulating. I mean, especially as we're talking about nascent applications and technologies. It's a message that we bring forward in lots of different parts of the world. It's just go slow, And the other message is, if you look hard enough, you may actually find that you already have a regulation that applies.
Indeed.
So
Exactly.
take it easy, take it slow, and let the technology take hold before you try and do too much regulation.
I think that's good advice. I think we'll turn to some questions from the audience. You guys still awake?
Hi, Meredith Gilston with the Export Practitioner. You mentioned, to follow up on the rules and regulations, are there rules or regulations that you guys are nervous about, that you hear about, that are coming in terms of, also you mentioned, I think someone mentioned FIRMA and export controls that could identify some of these emerging technologies before they're really fulsome and try to control them before they really take full flight. Thanks.
Let's take that one.
I mean, FIRMA is a Treasury area, but I can with entire confidence tell you it's outside my wheelhouse, and so I'm really not in a position to comment on that part of it, at least.
Mm-hmm.
I guess one thing I would say on there, not on the rule. Sorry, did you want to?
No, I was
Okay.
going to say for me also, I think that question is out of my wheelhouse.
Yeah. It's probably out of my wheelhouse too, but not on the rules piece, but on the second piece, I do think, a hallmark of a lot of these technologies, and the reason that the U.S. has been very successful in many of these areas is our open environment for research. And I think legitimate national security issues can be raised, and we have the export control system to deal with that, and it ought to deal with that. But I think we have to be careful that we're really dealing with the national security issues, because it's ultimately kind of the openness of our academic environment and our company R&D environment that has made the U.S. a real magnet for talent, and kind of a center for excellence in a lot of these areas. So I think if we get that balance wrong, we put that at risk.
Please.
Is that me? Thank you. Sherry Stevenson, ICTSD. I'm going to try to bring together two parts of this really interesting panel. I'm going to ask a question, and anybody can answer it. But I was just wondering in my mind if the implementation of the 5G, which sounds very exciting, would have any impact on the use of blockchain technology to make more available people's use of digital cryptocurrencies. Because my understanding is that for Bitcoin and other cryptocurrencies at present, one of the limitations to their use is they cannot be scaled up. In other words, there is only a limited number of transactions that can be performed every second. But it seems like the 5G system allows the speed of of transactions to be tremendously faster. I do not know if this applies to the blockchain technology or not, or am I just mixing things up? Thanks.
It's a good question.
So, do you want me to start on the computing power? So Bitcoin and other cryptocurrencies is built on what's called a public blockchain that anybody can go on and anybody can buy that type of cryptocurrency. In order to validate that you have the money that you need in your account to purchase it and you are who you are, what happens is once you've put in your request to buy on the Bitcoin, since it's public, that request goes out to everybody who has a computer, what they call a node, on the blockchain, and then there's a very complex mathematical equation that somebody has to do. The first one to do it, then the problem's solved and the information's verified and the person can make their purchase. That uses a tremendous amount of computing power, right? Because there's computers all around the world. I don't know if 5G solves that or makes it faster, because you literally have computers around the world. 5G's in 4 cities. It might be able to, but just when you think about thousands of computers around the world trying to solve the same problem to verify the information, I'm not sure if 5G is the solution. It may be. Most blockchains, similar to what Maersk is doing, is private. So you have a limited number of people who are on the blockchain and who verify and validate the information. So the computing power needed is much less. Yes.
So I guess I have a couple. I think I agree with everything you just said, and I think that 5G is going to the extent that low latency would enter into this in some way. Maybe someday. I think part of it is with 5G, we don't know exactly what it's capable of. So I wouldn't put anything past it. But for right now, I don't see it. But the other thing to remember about 5G is that because it is a different technology from 4G and even from just sort of fast fiber connections, that if you're just looking for speed, there's lots of technology today that'll do that with just a super good Wi-Fi connection connected back into fiber through a node. So it's not necessary that you need a 5G technology to help with what you were asking.
And I can just add from my Mastercard hat, blockchain or cryptocurrency transactions are just inherently slower than a traditional retail payment transaction. I mean, you're talking about hours, maybe a day or two versus seconds. So in terms of whether, at least in the payment context, I don't think it's going to make a difference.
This, I know, close to Deborah's heart, but maybe others could comment on it as well. And I think it was raised in the Treasury paper, Doug. But regulatory sandboxes, I think many people have had experiences with them. So maybe if you could identify best practices and things that work and things that don't work from the perspective of regulatory sandboxes.
Doug, I think that's... Yeah, I hate to be demonstrating my ignorance here, but I'm not on the regulatory side, so I'm really more on the trade rules side. So it's a little bit hard for me to respond to that. Other than it's certainly been identified as, and we heard at the lunch, for example, and we know about what's been going on in the UK and Singapore in that space. I think for the United States, there's kind of some issues just in terms of like the overall large size and complexity of our economy. But I'd be happy to take that one back for you and get back to you on it personally, but get some real experts who can comment on that.
I know you know my view on regulatory sandboxes. So I'm not a fan because they come with a whole inherent set of rules. So to me, it's regulation on top of regulation. And if there's something innovative that a company wants to do, whether it's a startup or a company that's been around for a long time, sometimes termed an incumbent, I think you should talk with the regulator. And I think you should determine what you can and can't do with your regulator as opposed to imposing a whole lot of rules on top of that. And particularly in the US, we're rules-based. Whereas in most of the rest of the world, it's principles-based. So doing a regulatory sandbox in the UK or Singapore or even Australia is very different than doing a regulatory sandbox in the fintech space or the insurtech space. Fintech has a lot of regulations and laws on it that are prescriptive. Insurance is the same, and insurance is 51 different jurisdictions. And I think just putting additional rules on top of that for our system doesn't make a whole lot of sense. That's my own view. I think you have to look at your regulatory system before you export an idea from another country, because what works in their country is based on their rule system and how they operate versus how we operate. That's just my view.
Yeah, and I mean, I just would say though, but I mean, I think, particularly if you look at the report that I referenced earlier, I mean, there is a recommendation in terms of facilitating responsible experimentation. And so, I think one of the things that certainly we'll be exploring is, can you work with state and federal regulators to kind of create that kind of environment? But I think it's a TBD type situation at best at this point.
I think it also goes back to your point, Doug, about education, right? And educating regulators and the community largely about these emerging technologies. Please.
Thank you. John Cook from the City UK, representing financial and related professional services. In the UK, we're going to be developing a new and independent trade policy, and so we have an opportunity to think afresh about what trade agreements should include on this question of data and technology. Now, are the only real provisions that are necessary are on maximum freedom of data movement and absence of data localization provisions, or if the panel had to write out a prospectus of everything that would be desirable to have in a trade agreement to maximize the facilitation of this area of business, what would you say? Because we have an opportunity to think afresh about this, and I'd be interested in the expertise of the panel. Thank you.
I'll just start in terms of the financial services space. I mean, we very deliberately felt that you could not just structure an obligation that kind of said no, that was an explicit prohibit on data localization, that it had to be circumscribed by certain conditions that ensured that financial regulators, and the key term here is access to the data that they needed. And so what we were able to do was to come up with a series of, kind of conditions and tests that essentially allowed our regulators, gave them the comfort that, okay, we can engage with the private sector if we have what we consider to be legitimate assurances that we have access to the data that we need to do our jobs as regulators, then that works. But it was by no means some kind of unconditional, set in stone rule that you had to prohibit data localization. It was caveated.
I guess I would just say there is much more that is important in a trade context than the provision on movement of information and data localization. I think that's super important. But, if you look at the digital trade chapter of USMCA, I forget how many pages it is, but it's, there are quite a number of interlocking provisions just in that chapter that I think ultimately you can, in a way, all tie back to data, and data-driven innovation doesn't happen in a lot of kind of the digital economy. Can really be impeded if you don't have kind of a full suite of rules and approaches, and both the UK and the US have iterated on those approaches in their domestic context, and I think there's actually a fair amount of commonality between the two. But I do think it's much more than that. I mean, things, technology neutrality, market access for services are just a couple of examples, and then there are areas even outside of the digital trade chapter that are very relevant for how the digital economy operates. And as I said before, in the services market access context, in the IP chapter, and kind of do you have copyright rules that are kind of fit for the digital economy? So I think it is much, that one provision is the one that gets the headlines, but I think it's quite a full kind of suite of provisions.
Thanks. Agreed. Okay, well, I think I'd like to thank my fellow panelists. Hopefully you have now been educated about what amazing companies here on the panel are doing on these emerging technologies, and our perspective from the government. So thank you very much.